Hello everyone, have a wonderful day. I am Kalpana, Head Assistant Professor, Department of Business Administration, Bharathiyar Arts and Science College for Women, DEVIYAKURICHI. Today I discuss about the topic is capital budgeting. Today discuss the topic is capital budgeting. Capital budgeting divided in two parts. Capital budgeting. Capital means investment of funds in different business and new business or start a new business, that is called capital. The capital classified in fixed capital, another one is working capital. Fixed capital means, for example, plant, machinery, equipments, etc. Working capital means day-to-day expenses, that is called working capital. Next one is budgeting. Budgeting means allocation of funds, means different kinds of business activities. For example, purchase of raw materials and then purchase of equipments and for example etc. and then investment of different kinds of investment, short term investment and then long term investment for like shares, debentures and dividends, etc. Next one is capital budgeting. Meaning of capital budgeting. Capital budgeting is also known as investment, decision making, planning the capital, expenditure and capital decisions, etc. Capital budgeting means allocation of funds, means different kinds of business activities, that is called capital budgeting. Next, another one is methods of capital budgeting and then how to calculate the capital budgeting. Next one is methods of capital budgeting and how to calculate the capital budgeting. The calculation of capital budgeting divided in four categories. First one is payback period, second one is net present value method, third one is internal rate of return method, fourth one is average rate of return method, the short form of ARR. The calculation of payback period, there are three categories. First one is even cash flow method, second one is uneven cash flow method, third one is post payback period method. Next one is net present value method, divided in two categories. Net present value method, another one is excess present value method. Internal rate of return, there is no categories. Average rate of return, there are two categories. First one is an average annual profit and then average profit. Next topic is payback period. This is a first method of capital budgeting. The payback period classified in three categories: even cash inflow, uneven cash inflow and then post payback period. How to calculate the payback period and how to use the formulas in payback period. First one is even cash inflow, means using this formula, payback period is equal to initial investment divided by annual cash inflow. This is a simple method of payback period, the basic method of payback period. Another one is uneven cash inflow. The following problem giving the uneven cash inflow. For example, first year 2000, second year 3000 and fourth year 6000. Can be used this kind of formula. Payback period is equal to number of years plus balance amount divided by next year cash inflow into 12. Next one is last kind of payback period, post payback period. Post payback period, how to calculate and using this formula, this kind of formula used: cash inflow into estimated life minus payback period. Next method is net present value method. Net present value method, how to calculate and using this kind of formula, total present value of cash inflow minus total present value of cash outflow. Next another one kind of net present value, excess present value. Excess present value method, using this kind of formula, total present value of cash inflow divided by total present value of cash outflow into 100. Next another one method is internal rate of return method, the short form of IRR. Internal rate of return method, using this kind of formula, lowest rate plus lowest present value minus investment divided by lowest present value minus highest present value into difference in rate. Next one is average rate of return, short forms in ARR, how to calculate means average profit divided by average investment. Capital budgeting methods, how to calculate, and using this kind of formula. Capital budgeting, the major categories for 4: payback period, net present value method, internal rate of return, and then average rate of return. This is a simple way to using and calculating the capital budgeting method. Hi students, I hope you understood the topic. We will meet in next topic. Thank you.